So last time we started studying the investing.com and how it works, because like we said last time, this is a very important information website. It contains news, global news from across the globe on everything which happens that is going on the global financial markets. And we can see here data about cryptocurrencies markets, about commodities, bonds, stocks, each and every market that is known to us and known to financial economics. We got acquainted with economic calendar and we understood that this is a very important tool to trade for events that are going on outside there on the financial markets, decisions of politicians, policymakers, some very important people and their decisions, their choices, their investments, what they do and how they do this. So it's a great information source for people to trade. Major economic news from the past several days include cryptocurrencies markets, because if you look at cryptocurrency charts and Bitcoin in particular, Bitcoin is the major cryptocurrency. It started its downward slide since March 2022, and there was a very long period of this currency's decline, all the way starting since 2018, since flash crash. The price of Bitcoin was really, so it fluctuated between $5,000 and $18,000 a piece, this currency. There were great fluctuations before that. For example, this one. There were periods when nobody actually got interested too much about this currency, and it was when it was introduced to the markets, so its price, it's unimaginable today to see that Bitcoin could be so low, close to zero, $7.8 a piece, or even 116, 153. People were mainly skeptical about this. Then in 2013, the United States began its famous monetary tightening, which led to many currencies across the globe fluctuate and devalue against the dollar. Russian ruble devalued some 60%, 50 to 60, 40% perhaps during this period of time, and there was a hike in the price of Bitcoin up to $1,100. Then it subsided, and all the way to from 2013, starting from 2014 actually, all the way to 2018. So for 4 years, Bitcoin was not a very great investment choice, investment opportunity. People avoided it. They were skeptical about this currency. Nobody actually believed that it has a great future. Then there was this famous flash crash in late 2017, early 2018. Very big fluctuation, a very big rise in the price of Bitcoin. So if we take a longer picture of this cryptocurrency, it started with a very low point, and it traded mostly in this corridor, I believe. And this corridor is like 20,000 to 5,000 something. So those were the fluctuations. And then the pandemics, of course, was a very major event in the financial markets. It was a very important event, a major event that is still dominating the global economy, the global financial system, because the pandemics led to lockdowns, the industry collapsed, people went on furlough schemes, everything actually collapsed. March 20th, mid-March, everything started going down. Each and every asset on the global financial market started going down. And it was at this point in mid-March when the United States, the European Union, the Euro area, the European Central Bank, the Federal Reserve System of the United States, major central banks across the globe in Australia, New Zealand, Canada, Russia, they decided to stimulate the economy by lowering interest rates, key interest rates down to almost zero. In some instances, some countries like Switzerland and Japan conducted very lax monetary policy even before that, so their monetary policy was very loose indeed even before the pandemic started. They provided loans to commercial banks at negative interest rates, and so deposits brought you no income. People were more interested in making investments into stocks and government bonds. Although also we can say that government bonds were not a very important issue during the pandemics and the period in between 2020 and 2022, when inflation started rising in early January all across in the advanced countries. It started rising even earlier in the emerging markets, in emerging financial markets like Brazil, Argentina. Argentina is a very high inflation economy still today. Then the US government and the European governments, the EU Commission, EU monetary system, actually they started issuing more money, and that was the point when they introduced their fiscal packages. They were not afraid of government debt because interest rates were low, and nobody thought that government debt could be of any importance to them. So, assets, other assets, many assets like gold, and stocks, especially the stocks of big tech companies and simple ordinary tech companies, they started their extraordinary and incredible hikes in the financial industry. They started growing and growing and growing, just like Bitcoin. So it started all the way from something like $10,000 a piece, and it reached its height at 64,000, somewhere here. That was in April 2021. By November by November last year, so a year ago, Bitcoin reached its historical height. It was $68,400 for $15 a piece. It was in mid-November, and on fears of greater inflation in the United States and the European Union, Bitcoin started its spectacular downward slide. Inflation was the dominating factor behind the policies of the central bank in the United States, because inflation is a very negative thing in the economy to have. It precipitates very negative issues in terms of assets value. Assets lose their value because of inflation. Wages lose their value. The power of money, the purchasing power of money, gets lower, so people are becoming more interested in real assets such as gold and other commodities. Oil, which at first started its, I think the most spectacular downward slide was for the oil market. It went down as far as zero, because in those days nobody really wanted to buy the fuel, because the planes did not work, did not fly, cars did not go, everything was in lockdown during the pandemics especially, so oil was very cheap. Later on, when OPEC countries met in Vienna and decided to start reducing their oil supplies, their oil production, the price of oil started going up and up and up and up, until it reached its height, its historical, one more historical height, because actually oil was something like $150 a barrel right before the global financial crisis in 2008, and it was the last time when oil cost so much. It was very expensive. Today it's less than 100. It's something like $80. The price of oil subsided a bit after Russia invaded Ukraine, and the war started escalating during this Ukrainian crisis. The price it drove the prices of oil and gas, and the energy crisis embarked in its full strength in the European Union. Especially the United States was never quite afraid of high oil prices and the lack of oil, because the United States is itself a very large oil producer. It was always a very large, big producer of oil. When Trump became president of the United States, he decided to allow American oil companies develop oil, more fracking oil, and more oil in the Gulf, offshore wells. So they started doing and producing more and more of the oil, and the United States became the largest exporter of oil, even maneuvering, outperforming Russia and Saudi Arabia. Today, the United States is the largest oil producer in the world. Particularly very important events that happened in the markets, and they determined the behavior of all other assets, is of course, like I said, key interest rate decisions of the major central banks, because they started very dramatically in a very short period of time. They strengthened and they tightened their monetary policies all across the advanced countries, and this was a depressing factor for the big tech and for the fintech, for cryptocurrencies. So Bitcoin went down as far as 16,700 almost. So it even broke the line of 16,000 and went down as far as 15,700, the lowest point in a couple of years. So it's a very spectacular downward slide. The last event which happened in the cryptocurrencies market was that Binance crashed in its Binance wanted to merge or to acquire the platform, the crypto platform behind the cryptocurrencies, one of the major platforms, and this acquisition collapsed. Binance withdrew from this operation, from the execution, and it caused Bitcoin to go down as far as $15,700 a piece. It may go down even further because the dynamics actually starting. So it's been a year now since Bitcoin started going down. You see here, it always went down. There were periods of correction, again impulse and correction. Then there was the period when Bitcoin stagnated in between $15,000 and $25,000 a piece. It may also stagnate here at this point. Of course, everything depends on key interest rate decisions once again, but the financial industry now may, at least in the United States, breathe a little bit easier due to the fact that in the United States inflation started going down. Before the previous inflation announcement, the United States economy was running something like 8.2, 8.4% in annual inflation. Last figures published were better than expected, 7.7% inflation, which is a very great thing for the United States economy to do. It started showing signs that the monetary tightening is working. Everyone expected the inflation rate would be something like 8% annually, but it was actually 7.7%. That means perhaps the United States Federal Reserve System is not going to be harsher than it is today, and maybe it's going to end its harsh tightening policy this month. Maybe next time it will not increase. It will not make a 3/4 increase next time by the next meeting of the U.S. Federal Reserve System. The instruments which we usually use in order to understand the workings of the financial system and the monetary system, we can take any kind of asset here actually, and I will be able to show some of the dynamics and how to conduct basic technical analysis in this business, in the markets. Well, for example, we take, let it be gold, perhaps. Gold futures. Gold is traded on the futures market. So like I told you before, when we analyze the market of Bitcoin, if we look again, mid-March 2020, that was the starting point when things started changing. Yeah, there was this collapse in early March when economies went on lockdowns. The price of gold collapsed. But later on, the United States and the EU started issuing more money. They announced their big financial and budgetary packages. It meant for people, for inflation especially, that money is going to be easier. So they started getting more interested in purchasing gold. Gold went as high as $2,000. You see here, it's this peak, $2,077. That was an increase from 1,450 in mid-March. And by early August, it was 75%, I believe. This is a 75% increase. So it makes a lot of money, actually. If we take a greater perspective, and if we try to see how it really worked, this global market, from mid-March to early August 2020, it made almost 63,000 points. So if you invested one lot of gold in mid-March, by early August you would make almost $63,000. That means 63 times as much, 63 times as much as the initial capital. Yeah, so it was a very great opportunity for people who expected this. Many gained lots of money out of this. Fluctuations during the lockdowns, people were sitting homes, like we know, and they used mobile apps to trade in different shares and different assets. It was a very great opportunity for them. What I'm doing here, actually, this is a platform which is called MetaTrader 5. This is the latest, the most modern platform that exists to trade. MetaTrader is the trading platform that can be used to make your investment decisions. Actually, it's the basic internet platform to trade in each and every asset that there is in the financial industry. In order to start trading, you will have to download this platform, MetaTrader 5. This is not a broker, but it may provide you with a demo account if you would like to try and place some orders. Today the market is closed, so we cannot conclude any financial deals. For example, I tried to do this and you've listened to a very strange sound. It alerts people that it is not possible to place a new order. For instance, here, like I cannot buy or I cannot sell, and it produces these very strange alerts and sounds. Everything wrong can be sounded like this. So it's a warning signal. Here in the table on the left hand side, we have symbols, we have the bid price and ask price, and daily fluctuation. Now we can also, I think we can also add something. What is very important is the spread. Yeah, columns, spread. A very important thing when you start trading is to look at the spread. Why is it so important, this spread thing? You see here, I have it here. It's a very important instrument or a very important indicator for you to look at. For instance, Brent crude oil is a very cheap thing to trade. You see, why is it cheap? Because the spread is $2. It's the lowest brokerage fee, so to speak. This column, the spread column, shows the fluctuation, not the fluctuation, but the difference between the bid and ask price. If you look at Russian ruble, if you would like to trade Russian ruble against the US dollar, you will have to pay $2,000 a lot. If you would like to buy one lot of this currency pair, you will have to pay $2,000 a lot. It makes it understandable why people do not trade these days on the Moscow exchange to buy dollars or rubles, euros. It makes it absolutely senseless. You will never be able to replicate this money. Only if you trade if you place very large orders. Only in that case. And who can place very large orders these days in the foreign exchange market? It can be only the biggest banks like Sber or VTB, Alpha Bank, so they can do this. If you look at the Russian ruble chart, if you create a chart and see the graph, like here, this is the Russian ruble against the dollar. What kind of market is it? We've seen the gold market now a little bit earlier, and we've seen that it was, well, a bit more democratic in this way. But here we will not be able to understand anything what is happening. Time frames, actually, if we use time frames data on this market, it's actually the same, like daily chart, for instance. Russian ruble also made very spectacular performance during this current year. Yeah, you see that after the special military operation started in Ukraine, Russian rubles hit historical low. It cost something like 135 rubles a US dollar. The markets were very, very nervous, and the Central Bank of Russia decided to step in. It was a very draconian period of time in the monetary policy of the Russian Central Bank, actually. what we see here is an absolute collapse. Before that, Russian ruble fluctuated like any other currency. It was a marketable currency. Why marketable? Because the central bank introduced free floating regime in Russia back in 2013. Ruble started fluctuating freely with only determined by market forces. That was back in 2013, just before the US started its monetary tightening. And like I told you before, it was a very great factor behind currency devaluations all across the emerging countries. Russia was not the exception here. Russian ruble devalued. But it was actually the pandemics that hit starting from early January, right? And in March also it made its spectacular hike up to 81 or 82 rubles a dollar. Then there was the big correction by mid-June and a new height at 80 rubles a dollar in the fall of 2020. Then what the Russian government did, or Russian actually policymakers did in the Central Bank of Russia, they started intervening more frequently into the foreign exchange market in order to control things, because this could not be further tolerated. Perhaps they were also preparing for the special military operation, and the people of Russia were speculating about this, but they did not believe that this special military operation would happen after all. So they were quite skeptical. I was very skeptical about this, although I read articles from the media, from the West media, they were more sure about that Russia is going to still invade Ukraine. But I believe that the Central Bank of Russia decided to step in earlier in order to control things. And we can see this here. Russian ruble actually stagnated in this corridor, like you see, from 69 to 80 rubles, or even narrower. It can be seen here 76, 77. The corridor was actually much narrower. So the central bank, the Bank of Russia, decided to step in earlier. Maybe that was the point, because they were preparing for the special military operation, and they tried to make Russian economy adapt easier for the financial hysterics that would follow after that. They could have expected that, of course, if they knew about this. But they miscalculated, and the financial system, the Russian ruble, because it was on the free currency float regime, Russian ruble devalued, and there was still this financial hysterics and financial runs here. Later on, what you can see here also, just look at the candles before the special military operation. You see what kind of candles we had. There were normal candles, I would like to say. Usually, what I don't like about this picture is that it shows bull candles in black and bear candles in white. Usually we see, and we can see on investing.com, that bear candles usually are red and bull candles are green. So before the special military operations, the candles were like any other candles in the foreign exchange market or the financial market. They were good candles, normal candles. But after the special military operation, what you see here is that candles discontinued being normal. For instance, if you take this daily candle, what kind of fluctuation is it? Yeah, it has a fluctuation of a daily fluctuation of almost 5,600 basis points. A daily fluctuation. Before the special military operation, well, for example, this candle, it's also a very tall candle. It was 2,300. So a daily fluctuation increased 2 times. It doubled. And also, what is also a very important thing, the body of the candle became narrower, but the shadows increased, widened too much. You see here, these long shadows, upper shadows and bottom shadows, they became absolutely incredible. It's unimaginable. So a daily chart fluctuation, a daily bar fluctuation increased up to 6,000 basis points. This candle, I believe, is even more. It's 10,000 basis points. Daily fluctuation, right? Isn't it interesting, or isn't it impressive, incredible? And also what we know in the foreign exchange market, like I told you just a couple of minutes before, nobody trades in this market. The fee, the spread between the bid and ask price is $2,000 a lot. You will have to pay $2,000 if you would like to buy or sell this currency pair, US dollar to Russian ruble. So it's just absolutely unimaginable situation. But the daily fluctuation shows actually that you can make profit out of these operations. And the banks that are doing these operations are only 3. So I don't understand that. Why is it so? This question really needs an answer. And who knows this answer? He can speculate. He can find an answer and say why people like we simple people don't use these opportunities. Well, first of all, of course, we pay too much of a price to buy a dollar or a euro. You will have to pay 10% interest rate, and also a bank takes some sort of a fee, so it makes almost a draconian measure for you to buy a euro or a dollar. For example, in late October, the financial institute, the financial university decided that I go on a business trip to Bulgaria, to the European Union. Well, the situation during this period of time, October, there were air strikes, there were some planes crashed, and there were high security alert by the end of October. There were many difficulties about getting a visa to go to Bulgaria. Even Bulgaria can be considered a sort of a friendly country, although it is not. But still, some people say that it is a shadow-friendly country for Russia, but it was also very hard to get a visa to go there. You will have to change several times. You will have to fly from Moscow to Istanbul, for instance, and from Istanbul to Sofia. You cannot cross the Dardanelles. You cannot go by bus there, which could be an easier and more convenient way to go, because you will have to get a visa. So you will have only one opportunity to fly. And it makes, so by each stage of this process, you will have to pay more money to go there. A colleague of mine decided to do 4 changes. So she changed in Warsaw, she changed in Yerevan, in Sochi, and she flew over to Sofia. 4 changes. It cost her half the price. But I've decided to go to Istanbul, and from Istanbul to Sofia. So only 1 change. And it cost me twice as much as her in her 4 changes, right? But all those, when I think about all those check controls and check in and check out in the airport, and your luggage, taking it and registering it again, so this is a complete nightmare. Also, in order to go to the European Union, you will have to take some money. You cannot go there without cash, right? You cannot go with your debit cards there, because they're not working if you have your cards. For instance, Rossельhozbank, when I came into the office, local office, they told me that, yeah, it is very much possible if you place a deposit with us in our bank. If you pay 15,000 rubles to get a personal debit card, you may go and use this Union Pay card in the EU and it will work okay. But when I asked, for instance, I would like to buy a ticket for a train going to from Sofia to the university that was chosen as a business trip for me. And I could not do this because the SMS messaging system is not working. So it's not going to send a code which which you will need in order to complete this transaction. So it's absolutely unthinkable. So why do I need this debit card to pay if I cannot pay it? Yeah, and I will have to still pay 15,000 rubles just to own it. Is it a sort of a toy? Of course not. So the only issue, the only choice, and the only opportunity is to go there with cash. But then one more question rises. The Russian customs, if you take money with you to the EU, you cannot take it back to Russia because they will confiscate it, or at least they will make you buy something in duty-free shops in the airport. So it was also a very drastic decision, or a drastic choice. When I finally landed in Sofia, the Turkish Airlines said that I have to declare all the currency I have, each and every piece of currency I have. It was just like a warning or an alert, false alert, I believe. Because when I came up to a customs officer and told him that I have foreign currency with me and I need to change it for Bulgarian lever, which is the national currency of this country, he asked me, how much money do you have? And I frankly actually told him that I've got only 1,300 euro. And he just smiled and said, get away from here. We register people who have $10,000 or euros or more. you do not have to declare your currency. But later on, so this is actually, for Russian people to go there is a complete nightmare. For me, it was sort of an experience that I did not very much like. I had to pay in Russia, in order to own those 1,300 euros, I had to pay 77 rubles a euro. Officially, you have to pay 60 or something. So you will have to pay 17 rubles more, and it is still considered a very favorable, a very good transaction, profitable transaction, because Rossельхозbank offers very sensible rates, bid and ask rates. If you go to Sberbank, you will have to pay 25 rubles more to own just 1 euro or a dollar from the official exchange rate. So what I don't like about it, or what really impresses me, is these great fluctuations, and these candles are not normal. If we choose 5-minute charts, you see what is happening. They're also not normal. The Russian market today is not a market in the real sense of the word. So this candle, can you imagine that this candle is formed in 5 minutes? What kind of fluctuation does it make? For instance, this candle, it makes 1,200, almost 1,300 basis points. Usually this is the fluctuation that gold market makes on a announcement like last time. We made an analysis of this transaction. You remember, yeah? When each first Friday of every month you have this announcement, unemployment data, and the market reacts, and the reaction is 1,500 basis points. In a matter of 15 maybe minutes, 5 to 15 minutes it will take. The gold market, and the gold market is not the ruble market. The gold market is a global market. He is interested in Russian rubles these days, and actually even before the special military operation, he was quite interested in that. And also what you can see here is these strange, like looking in the mirror or something. You have these bear candles, then a sort of a mirrored exposition, and very low bottom shadows. You do not have these shadows almost in case of each and every bull candles. You do not have these downward, these bottom ones, yeah. But looking at the bear candles, you see these great fluctuations in the so the minimum price is much lower than the minimum price in terms of the bull candle. Just look at the picture before the special military operation. Let's see what happened actually before. What kind of candles we had in this market before the special military operation. All the way back to February. Here, for instance. February. Very normal candles. just like you see in each and every financial market, in Tesla shares, in Bitcoin shares, in I don't know, oil, gas. These candles are normal. And what about the fluctuation? Once again, let's measure the fluctuation of this 5-minute candle before the special military operation. 200 basis points. It's quite okay, but not 12 or 1500 points. So that means the fluctuations actually are going higher, but nobody trades in these fluctuations. Volatility is the blood of the financial industry. If there is volatility, I can make money out of it. If there is no volatility, I cannot make money. So I don't understand why people do not make money in this market. What is happening in this industry today? I don't know, actually. There are some explanations, and you can read these explanations in the media. You can listen to people, to some analysts, saying like, yeah, we have this fee you will have to pay to the government. Yeah, there's 10% fee, then commercial bank takes some fee. So it means that only large banks trade. But still, the spread is $2,000 a lot. And the fluctuation, a daily fluctuation, is 6,000 basis points. So if you pay 2,000 basis points, if you pay $2,000 for buying or selling the currency per US dollar to Russian ruble, it still makes you 3 times as much, isn't it? 3 times as much. So why is not anyone out there in the financial industry he is interested in getting money? I still don't understand. Even half as much is great in today's financial markets activity. Still, this profit, this income is very, very large. You cannot make so much money in any other market. If it were like 20,000 in terms of the spread between the bid and ask, that would make it senseless to trade. So still is not clear. And I don't know the answer to this question, actually. If you try to ask me further about that, I will not be able to answer that. Maybe you find the answer to this question, what is happening. But for me, it's absolutely unthinkable and unbelievable. No market in the world produces such results. No market in the world performs this way, except one market, actually. And this market is the Bitcoin market. But Bitcoin is a cryptocurrency. And in terms of monetary operations, it's not the currency in the real sense of the word. It's not the currency which cannot be used in daily transactions. You cannot go to a local shop and you cannot buy anything using Bitcoin. In Russia, for instance, at some places, in some countries of the world, it is even illegal. In Russia, it is illegal. So only Bitcoin performs this way. Perhaps some metals also, like palladium. Palladium is also a very great thing to discover. If you look at palladium, for instance, If you click here to add palladium, what we'll see? Palladium versus US dollar. 10,000. The difference between the spread is 10,000 basis points. Before the pandemic started, this spread was something like 2,000 basis points. 5 times less. Today it's 5 times as much. You will have to pay $10,000 a lot to buy or sell this a lot of palladium. Well, for me, it makes it impossible to trade in palladium then. So trade in ruble, which is 2,000 basis points in terms of the spread between bid and ask price. Well, while I'm speaking about this and trying to explain to you, we are so to speak starters in the financial market. If we create an account, if we open an account with some broker, we're still the starters. And the point here, we should actually start by trading in low spread assets. So trade like euro, British pounds, New Zealand dollars, Canadian dollars, Swiss francs, Japanese yen. The cheapest currency pair today is euro, and I think also Australian dollar. 14. Yeah, Australian dollar is the cheapest currency in the world to buy. It's a very good thing. Yeah, before the pandemics, this spread was 6 to 7 basis points. So you see, the pandemics changed lots of things in the financial industry. Banks started taking more fees. And what does it mean? It means that banks are very, very rich today, much richer than they were before the pandemics. They are at least twice as rich as they had been before the pandemics. And they're still crying. Today they're crying that they are losing income. I think banks are today, the banking industry today is the happiest industry if they take so much money in terms of fees. And government should also be happy, because if you tax these fees, you will get lots of money in terms of taxes. So why should you cry? What's the problem in the financial industry? Also is not clear. And gold, of course. Gold is 44. The difference is 44. That means you pay $44 to buy just one lot of gold. And like I told you last time, usually you buy, if you would like to buy a lot of gold, you will have to pay half the price, with the other being paid down by the broker. And you will pay $44 to the broker. And this market is a very dynamic market. It fluctuates. It's volatile. So this is the gold market. Yeah, our lovely gold market. With its good candles, with its red bear candles and green bull candles. Quite normal candles with fluctuations, daily fluctuations, like here, 3,000 points. But it's the gold market, it's not the currency, so it's quite okay. 6,000 points. What about this one? 4,000. 3,000. So 6 to 3,000 basis points daily fluctuation in this market. 5 minutes fluctuation makes 200 basis points. Quite okay. For 5 minutes, 200 basis points is quite okay. When we analyze markets such as these, we need oscillators and indicators. We need trend indicators, and the trend indicators, usually we use moving average, of course, which is when you make a when you try to trade on 5-minute charts, you use usually 50. The period is 50, so it makes 50 prices, an average of 50 prices right here. What is this red line about? What is this red curve about? It is the average gold price over the 50 candles, right? This is a 5-minute chart. That means each candle is formed in 5 minutes. And this red line means I take 50 5-minute candles, make a sum of it, and divide by 50, and get an average price. And it's the moving average. And also I need a moving average of 20 periods, and I will make it blue. So this line is the average of 20 candles. Why I need these two lines? Why are they so important for traders to look at? Of course, there are other strategies and there are other ideas and basic points behind these charts and candles, but the major idea is that traders discovered at some point that there is a sort of a cyclicality in the movements of different shares and assets, and they repeat at this particular periods of 20 and 50 candles. That's why 20 and 50. So when you decide what you should do, buy or sell, the strategy is to look at these two lines, the blue and the red one. If the blue line is above the red one, you consider opportunities only to buy. If there is the reverse situation, if the red line is above the blue one, you consider opportunities only to sell. Also, when you make decisions, we understand now that we should enter the market at this particular point, for instance, when the blue line or the red one is above some particular point. But what is also important is when you exit the market. In order to understand when you exit the market, you got to construct or add oscillator MACD. which is moving average, convergence, divergence. And this is your MACD. What does it show, this MACD oscillator? I would like to make it red. I do not like it white. I would like to make it not silver. I would like to make it red. And the line, well, let it be, I don't know, green. So what does it tell me, this MACD? It is the market activity. And what kind of market activity does it show? For example, let's look here. I would like to add objects. Yes, trend line. I draw a trend line here. What do we see here? This one. A trend line. And this one. What do you see here? What kind of picture does it make? This price is, what kind of price is this? Insert objects, horizontal line. Here. This price is 1767. This price is 1768. It's higher. Clear, right? It's higher. But what about the market activity? At the price of 1767, the activity actually is higher than the activity at the price of 1768. It means that the higher the price, the less people would like to buy at this price. It's the law of demand. The higher the price, the less you demand, right? So it means that at this point, when less and less people would like to buy at such a high price, this is the time for you to exit the market. And people start to go out and the market goes down. The same thing happens when you have a situation like this, for instance. It is even more clear, this MACD tool. Let's insert this object. Again, I draw a trend line here. The idea about MACD is to try to find two hills, so to speak, two mountains in the market activity. Mountain 1 and mountain 2. If there is only one mountain, it is not possible to understand the workings of this tool. When there are two mountains, it makes it quite clear what you should do. I need one more trend line again. What do you see here? The market activity at this price is higher than the market activity at this one. So at this particular point, you have to do what? To exit the market. If you are in the buying mood, if you bought, right? If you bought here, somewhere here, you should exit the market by the time the activity subsides. Because you do not see this, right? This is the future, which you cannot see. But this indicator, something that tells you something about the future. So it is at this point that you should exit the market, when the activity gets lower. I would like to find an example with the red line being above the blue one. Here, I don't like it here. Still not clear. Okay, let's try and do this after the break.